Welcome to Financial Fresh Start, where we discuss all things related to personal finance. Today, we're diving into the importance of building a strong emergency fund. Whether you're just starting your financial journey or looking to enhance your financial security, understanding and building an emergency fund is crucial. Let's explore why. An emergency fund is a dedicated savings account or fund set aside to cover unforeseen expenses or financial emergencies that may arise in life. It serves as a financial cushion, providing individuals and families with a safety net to help them navigate unexpected events without resorting to borrowing money or using high-interest credit cards. The primary purpose of an emergency fund is to provide financial stability and peace of mind during challenging times, such as job loss, medical emergencies, car repairs, home maintenance issues, or other unforeseen circumstances. Having an emergency fund can help individuals avoid financial hardship and reduce the need to dip into savings or take on debt, allowing them to maintain their financial health and work towards their long-term financial goals. Life is full of surprises, and not all of them are pleasant. From unexpected medical bills to car repairs or sudden job loss, emergencies can happen when we least expect them. Having an emergency fund ensures that you're prepared to handle unexpected expenses without relying on credit cards or loans, which can lead to debt. Financial preparedness is the proactive approach of planning and organizing your finances to anticipate and effectively respond to unexpected events or emergencies. It involves building financial resilience by establishing habits, systems, and strategies that can help mitigate the impact of unforeseen circumstances on your financial well-being. Here are some key aspects of financial preparedness and why they are significant. Peace of mind. Being financially prepared can provide a sense of security and peace of mind, knowing that you have resources in place to handle unexpected expenses or emergencies without causing financial strain. Reduce stress. Financial emergencies can be stressful, but having a plan in place can help reduce anxiety and uncertainty. Knowing that you have a financial safety net can make it easier to cope with unexpected challenges. Avoiding debt. One of the biggest advantages of financial preparedness is that it can help you avoid going into debt to cover unexpected expenses. By having savings or other resources set aside, you can pay for emergencies without accruing high-interest debt. Maintaining financial stability. Financial preparedness can help you maintain stability in your financial life, even when faced with unexpected events like job loss, medical emergencies, or natural disasters. Having a plan in place can help you stay on track towards your financial goals. Faster recovery. Being financially prepared can help you recover more quickly from financial setbacks. Having savings or insurance can help you cover expenses and get back on your feet sooner after an emergency. Flexible decision-making. Financial preparedness gives you more flexibility in making decisions. For example, you may be able to take advantage of new opportunities or make changes in your life without worrying about the immediate financial impact. Setting an example. Being financially prepared sets a positive example for others, including family members and friends. It demonstrates the importance of financial responsibility and planning for the future. In conclusion, financial preparedness is essential for achieving financial stability and peace of mind. By taking proactive steps to build savings, reduce debt, and establish financial habits, you can better prepare yourself for whatever life may throw your way. Financial experts often recommend saving 3 to 6 months' worth of living expenses in your emergency fund. However, the ideal amount can vary based on your circumstances, such as your job stability, health, and financial goals. For instance, if your monthly expenses amount to $3,000, aim to save between $9,000 and $18,000 in your emergency fund. Set realistic savings goals. Start by setting achievable milestones, such as saving $500 or $1,000, and gradually increase your savings target. Automate your savings. Set up automatic transfers from your checking account to your emergency fund to ensure consistent savings. Cut unnecessary expenses. Identify areas where you can reduce spending, such as dining out less frequently or canceling unused subscriptions, and redirect those savings to your emergency fund. Having an emergency fund provides a sense of security, knowing that you're financially prepared for unexpected events. An emergency fund allows you to handle emergencies without derailing your long-term financial goals or going into debt. An emergency fund offers a range of benefits that contribute to financial stability and peace of mind. Here's a detailed look at the key advantages. Financial security. An emergency fund provides a financial safety net, ensuring you have funds available to cover unexpected expenses or emergencies without resorting to high-interest debt or depleting your savings meant for other goals. Peace of mind. Knowing you have an emergency fund in place can reduce stress and anxiety associated with unexpected financial challenges. It provides a sense of security, allowing you to focus on other aspects of your life with greater peace of mind. Avoiding debt. One of the primary benefits of an emergency fund is its ability to help you avoid accumulating debt to cover unforeseen expenses. By having funds set aside, you can address emergencies without relying on credit cards or loans, saving you from interest payments and potential financial strain. Maintaining financial stability. An emergency fund helps you maintain financial stability during times of uncertainty, such as job loss or a medical emergency. It allows you to continue meeting your financial obligations and maintaining your standard of living until you can stabilize your situation. Quick access to funds. Unlike investments or long-term savings, an emergency fund is easily accessible. You can quickly withdraw the funds when needed, providing immediate relief in times of crisis. Protecting investments. Having an emergency fund can help protect your long-term investments, such as retirement savings or education funds. Instead of liquidating these investments during an emergency, you can use your emergency fund, allowing your investments to continue growing. Opportunity to take risks. Knowing you have a financial cushion can give you the confidence to take calculated risks, such as starting a business or pursuing further education, without the fear of financial ruin if things don't go as planned. Independence and self-reliance. Building an emergency fund fosters a sense of independence and self-reliance. It allows you to handle financial challenges on your own terms without having to rely on others for support. Improved financial habits. Establishing and maintaining an emergency fund encourages healthy financial habits, such as budgeting, saving, and planning for the future, which can have long-lasting benefits for your financial well-being. In summary, an emergency fund offers a range of benefits that extend beyond financial security. It provides peace of mind, helps avoid debt, maintains financial stability, and fosters independence, making it a crucial component of a healthy financial plan. Building a strong emergency fund is essential for financial security and peace of mind. By saving consistently and prioritizing financial preparedness, you can protect yourself from unexpected financial hardships. Start building your emergency fund today, no matter how small the initial contribution. Your future self will thank you. If you found this video helpful, don't forget to subscribe to Financial Fresh Start for more videos on personal finance. Thank you for watching.